special thank you to MarketUS.com for furnishing us this information. You can reach them at MarketUS.com or call them at 954-636-3232. Before we go, this deep dive was created by the MarketUS.com team. Let us know your thoughts in the comments below. It's right below the subscribe link.
Welcome, I'm Michael Price, your host, and today is May 29th.
And I'm Nancy, your co-host.
If you hand a civilian a tax-free check for $47,000 every single year for the rest of their life, I mean, they would probably think they just won the lottery.
Oh, absolutely.
Right. But for you, a veteran who has just earned a 100% P&T VA disability rating, well, that check is really just the tip of the iceberg.
It really is.
Because the real wealth, hundreds of thousands of dollars in hidden equity, healthcare, and education, it's buried in this crazy bureaucratic maze. And the absolute worst part is that if you don't actively ask for it, the VA will just quietly let you leave all of it on the table.
Yeah, it's a staggering reality, honestly. We tend to view this major life milestone, like getting a permanent disability rating, as a finish line.
Right. You get the rating, you get the direct deposit, and you think you're done.
Exactly. But in reality, it's actually the starting line of an incredibly complex system. You basically get your rating decision and this confusing 47-page pamphlet from like 1987, and then you're just expected to intuitively know how to claim a dozen downstream benefits.
And they all require completely separate applications, right?
Wow, yeah, totally separate.
And that is exactly our mission for this deep dive. Today, we are looking at the massive hidden ecosystem of benefits that are unlocked specifically by a 100% P&T rating.
Yeah, and we've got some great material to pull from today.
We really do. We're pulling from an incredible stack of sources to map out exactly what you have earned. We have a detailed transcript from Dr. Marshall Bahr, who is, an Army Ranger, a doctor, and crucially, a former VA comp and pension examiner.
Which gives him such a unique perspective.
Definitely. And we're also digging into a 2026 update article on state property tax exemptions by Brian Reese from VA Claims Insider, alongside this really comprehensive set of 2026 VA benefit reference notes.
And the overarching theme across all of these sources is just friction. The system is simply not built to proactively hand you these benefits.
No, it's not.
If you don't know the mechanics of how these programs actually work, you are going to miss out on life-changing support for both you and your family.
Okay, let's unpack this, because before we get into the specific prizes hidden in this maze, we really have to establish the exact key required to unlock them.
Right, the rating itself.
Yeah, because there is this massive misconception out there that a regular 100% rating and a 100% P&T rating are the exact same thing.
Oh, and they're entirely different legal statuses. This is where so much of the anxiety for veterans originates.
Really? How so?
Well, you can have a combined disability rating of 100%, sure, but the VA might still consider your conditions to be dynamic. Like, in their eyes, there's a medical chance your conditions might improve over time.
So they want to keep an eye on you.
Exactly. So they attach what's called a routine future examination date to your file. They fully expect to check back in. But P&T, well, that stands for permanent and total. And that permanent designation means the VA has officially determined your service-connected disabilities are static. They are unlikely to ever improve to a point where your rating would actually decrease.
So basically, no more of those terrifying brown envelopes in the mail demanding you show up to another exam.
Yep, no more envelopes.
Just the relief of that, the anxiety of having to constantly prove your disability over and over again is just totally gone.
Exactly. The VA is essentially closing the book on your evaluations, and that specific P&T status, that is the gateway. But even before we look at the downstream perks, we really have to look at the foundational monthly compensation.
Right, the baseline income. Because the numbers in the 2026 notes are just substantial.
They really are. For a single veteran, the base rate is $3,938 per month. And if you have a spouse, that bumps up to $400 per month.
Which means just at the baseline with a spouse, we are talking about roughly $49,000 a year. But the mechanism that makes this so powerful is that every single dollar is federal income tax-free.
That's the kicker.
Right? So earning $49,000 tax-free, that's the after-tax equivalent of grinding out like a $60,000 to $65,000 salary at a regular civilian job.
Right, exactly.
Except, you don't even have to commute or pretend to like your coworkers anymore. It is a massive financial floor for a family.
It completely rewrites a family's financial baseline. And importantly, it's insulated against inflation.
Oh, because of the QOA.
Right. Your VA compensation increases annually based on the Social Security cost of living adjustment, or its QOA, and the 2026 rates we are looking at, they reflect a 2.5% increase.
Nice.
And when you apply a compounding annual increase to a tax-free base over an entire lifetime, the math gets absolutely wild.
Yeah, the sources note that over a 30-year lifetime, we are looking at $1.4 to $1.5 million in total compensation.
It's incredible.
For a lot of people, that isn't just a safety net. I mean, that is a full-blown retirement. But as our sources make really clear, securing that income is literally just step one.
Just the beginning.
So the VA has essentially built this fortress around your baseline income. But what about the major expenses that routinely bankrupt families? Let's talk about healthcare.
Right, because hitting 100% P&T automatically places you in priority group 1 for VA healthcare.
Okay, so what does that actually mean on a day-to-day basis?
Operationally, it means all the nickel and dime friction of the medical system just disappears. There are absolutely no copays for VA medical care related to your service-connected conditions.
Wow.
Yeah, no enrollment fees. You aren't worrying about, a $50 specialist fee here or a $15 prescription charge there. But the benefit that completely changes the game for veterans is VA dental.
Now, wait, I'm looking at these dental notes and I am highly skeptical.
Okay, why?
Because in the civilian world, what we call dental insurance is basically a coupon for a routine cleaning and a stern lecture about flossing, right?
That's pretty accurate, yeah.
It barely covers real restorative work without massive out-of-pocket cost. So is the VA actually footing the bill for major dental work, or is there a hidden cap here?
It's a completely fair question because civilian dental insurance is notoriously restrictive. But yes, the VA absolutely covers major work.
Really?
Yeah, I mean, most veterans don't qualify for VA dental care at all. It is highly restricted normally, but 100% P&T unlocks comprehensive care. We aren't just talking about exams and x-rays here. We are talking about fillings, extractions, dentures, and the really big ticket items like root canals and crowns.
Which is huge. A single crown in the civilian sector can easily run you $1,000 to $2,000 out of pocket.
Oh, easily.
And a root canal is like another grand on top of that.
Exactly. And through the VA, this is provided at absolutely no additional cost to the veteran. But here is the friction we talked about earlier.
The catch.
Right. You have to actively claim it. When you get your P&T letter, the dental clinic doesn't just magically call you to set up an appointment.
Right? They don't know you're suddenly eligible.
Exactly. You have to proactively contact VA Dental to establish your care and prove your new status.
Okay, so the veteran is fully covered head to toe. But what about the family? Because civilian family health insurance premiums are one of the biggest drains on a household budget.
Oh, massive.
They easily run over $23,000 a year on average. And even if an employer subsidizes half of that, you are still bleeding hundreds of dollars a month just to hold the policy before you've even met a deductible.
What's fascinating here is how the VA addresses that exact vulnerability through CHAMPVA.
Okay, break that down for us.
That stands for the Civilian Health and Medical Program of the Department of Veterans Affairs. If your dependents, so your spouse and your children, do not qualify for TRICARE, your P&T status unlocks CHAMPVA for them.
That's amazing.
And the mechanics of how it's funded are completely different from civilian insurance.
How so? Like, what's the difference?
CHAMPVA has 0 monthly premiums. None.
Wait, 0?
0. In the civilian world, you pay thousands a year just for the privilege of having insurance. With CHAMPVA, you only pay a cost share.
Huh?
Right, so it's just a percentage of the services you actually use up to an annual catastrophic cap. It totally transforms family health care from a massive fixed monthly drain into a manageable intermittent cost.
But the sources wave a massive red flag right here. This is the ultimate 1987 pamphlet problem, isn't it?
Yes, the enrollment trap. The VA does not automatically enroll your family in CHAMPVA when you hit 100% P&T.
Of course not.
You must actively gather your benefit summary letter, fill out the specific CHAMPVA application, and mail or fax it in to enroll your dependents yourself.
And if you don't?
Veterans lose out on months or even years of free premium coverage simply because they didn't know they had to manually apply.
Man, so the VA secures your health and your family's health, removing the biggest monthly liabilities. But if CHAMPVA protects their physical well-being, the next tier of benefits in our notes is really all about securing their future.
Yes, the generational impact.
Exactly. This is where we see true generational impact, specifically regarding education and debt.
That brings us to Chapter 35, formerly known as the Dependents Educational Assistance Program, or DEA.
Okay.
This provides up to 45 months of education and training benefits. And the critical distinction to understand here is that this is not the GI Bill.
Right.
The veteran does not use this. Chapter 35 is a completely separate bucket of benefits specifically designed for the spouse and dependent children.
45 months. I mean, that's basically a full 4-year college degree.
Yeah, or they can use it for trade school, vocational training, or apprenticeships.
And the detail that really stood out to me in the notes is that your spouse can actually use Chapter 35 education benefits and CHAMPVA health insurance at the exact same time.
Yes, it's a dual benefit stack. It's incredibly powerful for a spouse who maybe paused their own career to care for the veteran and is now looking to go back to school, re-enter the workforce, or just transition to a completely new career. They get the monthly education stipend while maintaining full health coverage.
I was reading further through the education notes, and there's a section on student loans that I almost didn't believe. It looks like there's a way to literally wipe out a child's college debt.
Yes, it is the Total and Permanent Disability or TPD discharge program.
Yeah.
And it is arguably one of the most powerful financial levers in the entire benefits package.
So how does that actually work? Because usually, a kid takes out a loan and it's their problem. How does the veteran's disability rating erase someone else's debt?
It all comes down to who holds the legal liability. If the veteran took out a federal parent PSLF loan to fund their child's college education, well, the veteran is the legally responsible party for that debt, not the child.
Ah, I see.
And because the veteran has achieved P&T status, the Department of Education allows that specific federal loan to be completely discharged.
Wow, that is like finding a secret escape hatch for $100,000 of college debt. It just vanishes.
It does, but I have to play the voice of reason here for a second because the sources are very explicit about a hidden trapdoor.
Oh.
Yeah, while the federal government forgives the loan, you really have to look at the tax mechanics. When debt is forgiven, you often receive a 1099-C tax form.
Right, cancellation of debt.
Exactly. And while federal law currently has provisions protecting you from being taxed federally on that forgiven amount, the state level is a totally different story. Depending on where you live, your state might view that forgiven $100,000 loan as taxable income.
Meaning your state tax board looks at you and says, "Congratulations on the loan forgiveness. You now owe us income tax as if you just earned an extra $100,000 in cash this year."
Exactly. It creates a massive unexpected tax bomb.
That's terrifying.
It is. You absolutely must consult a certified tax professional before pulling the trigger on a TPD discharge to understand exactly what your state will demand from you come April.
That is a crucial warning. Erasing past debt is amazing, but obviously not if it bankrupts you in surprise taxes.
Right?
Now, naturally, if you are freeing up all this cash flow by eliminating healthcare premiums and student loans, the next phase of life is building future equity. Let's talk about the physical house.
Yes.
We know there's the VA home loan funding fee waiver.
Right. Any veteran with a service-connected disability of 10% or higher actually gets that waiver, but it is a massive piece of the 100% P&T financial picture.
It's a huge saving.
It really is. The funding fee is a one-time charge the VA assesses just to keep the loan program running. For a first-time buyer with no down payment, it's currently around $2,000.
Okay.
So on a $400,000 home, that waiver instantly saves you roughly $8,600 right at the closing table.
That's real cash back in your pocket. But the closing table is just day one. The ongoing permanent cost of owning a home is property taxes. And according to the Brian Reese article, there are 22 states that offer full property tax exemptions for 100% disabled veterans. But I have to ask you, are these exemptions actually uniform across those 22 states? Or is this another situation where the fine print dictates everything?
Oh, the fine print dictates absolutely everything.
I figured.
And the reason for this is federalism. The VA is a federal entity, but property taxes are assessed locally to fund, local schools, roads, and emergency services.
Right, the feds can't touch that.
Exactly. The federal government cannot mandate how a state collects its local taxes. So each of those 22 states has patched together its own distinct rules for what full exemption actually means.
So let's look at the examples from the Reese article. Iowa seems to be the gold standard here, right?
Iowa is incredibly generous. In Iowa, the full 100% exemption applies to your primary home and up to 40 contiguous acres of land.
That's massive. 40 acres tax-free?
It's huge.
But it also highlights how incredibly fragmented this system is. It's wild that your zip code dictates whether you get an entire farm tax-free or just a standard suburban lot. What about the other states?
Well, let's look at Connecticut. Connecticut usually applies the 100% exemption to the primary dwelling, but they have this fascinating quirk.
What is it?
If a 100% P&T veteran doesn't actually own a home, towns in Connecticut will often allow the veteran to apply that total exemption to one motor vehicle instead.
Really? That is such a specific localized adaptation.
Yeah, it's very unique.
What if we look at a state like Pennsylvania?
Pennsylvania is where we see means testing. Their exemption is entirely needs-based. They calculate a presumptive financial need level, which, as of January 1st, 2026, is capped at $114,737 in annual income.
Okay, so if you make more than that,
If your household makes more than that, you simply do not get the property tax exemption, regardless of your 100% rating.
okay, so Iowa gives you 40 acres. Pennsylvania cuts you off if you make too much money. Any other extremes?
New Hampshire is extremely narrow. Their full exemption doesn't apply to all P&T veterans. It only applies if your home was specially adapted through very specific VA housing grants, like the Specially Adapted Housing or SAH grant.
Okay.
Yeah, so if you didn't need your home medically adapted, you don't get the full exemption. And finally, Wisconsin takes a completely different mechanical approach. They don't give you an upfront exemption on your property tax bill at all.
Wait, so you still have to pay the county every year?
Yes, you pay the local property tax out of pocket, and then Wisconsin gives you a refundable credit on your state income tax return that covers the property taxes paid on your home and up to 1 acre of land.
Wow. So what does this all mean? I mean, it means you cannot just log into a random veteran Facebook group, see some guy from Iowa bragging about his 40 tax-free acres, and assume the exact same rules apply to you in New Hampshire or Wisconsin.
Definitely not.
You have to go directly to your specific state and county's Veterans Affairs portal to find the absolute ground truth for your zip code.
Exactly. Local administration is the law of the land when it comes to property taxes.
So we've locked down the daily cost of living, we've protected the family's health, funded their education, and optimized the physical home. But what happens if the veteran's health fails entirely?
That's a tough but necessary conversation.
Right? Let's transition to protecting the veteran's legacy. Because in the civilian world, if you walk into a life insurance office and hand them a medical file detailing a 100% permanent and total disability, they're going to literally laugh you out of the room. You are fundamentally uninsurable.
You are. The adverse selection risk for the insurance company is just way too high, but the VA recognizes this exact vulnerability, which is why they created VA Life.
And how does that work?
It is a whole life insurance program specifically designed for service-connected veterans, and the key mechanism here is guaranteed acceptance.
No medical exams?
No medical exam at all. There are no health questions. As long as you are 80 years old or younger, you are eligible for up to $40,000 in whole life coverage, which you can buy in $10,000 increments.
That's amazing. But if we connect this to the bigger picture, how does the VA actually afford to insure fundamentally uninsurable people without the program going bankrupt? I mean, it's not free, right?
Correct, it's not free. You do pay monthly premiums, and those premiums are based on your age at the time you enroll.
So earlier is better?
Exactly. The younger you are, the cheaper it is. And once enrolled, that rate is locked in for life. But to answer your question about how they protect the financial pool, they use a 2-year waiting period.
Okay.
When you sign up, the full $40,000 face value of the policy does not kick in for 24 months.
Wait, so if a veteran enrolls, pays premiums for a year, and then tragically passes away, do their beneficiaries just lose all that money?
No. The VA still protects the family. If the veteran passes during that initial 2-year waiting period, the beneficiaries don't get the $40,000, but they do get a full refund of every single dollar of the premiums paid into the system, plus interest.
Oh, wow.
Yeah, so you never lose the money you put in. It's an elegant mechanism that protects the insurance pool from immediate payouts, while still providing a guaranteed safety net for veterans who literally cannot buy life insurance anywhere else.
It provides immense peace of mind, really. And speaking of peace of mind, as we round out the notes, there are a couple of daily lifestyle perks that just make, civilian life a little sweeter.
Yeah, the everyday stuff.
First is full commissary and exchange access, both on base and online. The savings on tax-free electronics and groceries can easily offset a lot of daily inflation.
Absolutely.
But my absolute favorite niche perk is the America the Beautiful Access Pass.
Oh, it is arguably the best recreational benefit the federal government offers.
It really is.
Yeah.
Think about it. A single visit to a major national park like Yellowstone or Yosemite can cost $35 per vehicle just to drive through the gate.
Yeah, it adds up fast.
But with your P&P disability rating, you're eligible for a lifetime entry pass to all national parks, national forests, and federal recreational lands completely free.
It's fantastic.
You literally just do a one-time application online at usbog.gov, or you can even show your documentation in person at a federal land entry point, and you never pay an entrance fee again.
And it perfectly encapsulates the entire theme of this deep dive, really.
Hope so.
Because it is a phenomenal downstream benefit that vastly improves your quality of life, but only if you take the 5 minutes to actively claim it. The park ranger isn't going to chase you down to hand you a pass.
Which brings us to the ultimate takeaway. A 100% P&T rating is so much more than a monthly direct deposit. It is a comprehensive multi-generational benefits package that is easily worth hundreds of thousands of dollars over your lifetime.
Without a doubt.
But the VA system requires your active participation. You have to make the call to enroll in VA dental. You have to fill out the paperwork to secure CHAMPVA health insurance and Chapter 35 education benefits for your family.
Yeah, nobody does it for you.
Exactly. You have to navigate the bizarre rules of your own state's property tax maze. You've earned the status by putting your body and mind on the line. Now you just have to execute the follow-through.
It requires vigilance. You have to be the CEO of your own benefits package.
Here's where it gets really interesting. We spent this entire deep dive talking about how to maximize a 100% rating, but what if 100% isn't actually the ceiling?
Now, this raises an important question because almost everyone assumes that 100% is the absolute mathematical maximum you can achieve.
Right? That's what it sounds like.
But the sources highlight two very specific programs that punch right through that ceiling. The first is Special Monthly Compensation, or SMC. This is an additional tax-free financial benefit paid on top of the standard 100% rate specifically designed for veterans with extraordinarily severe disabilities.
Severe meaning what exactly? Like what triggers SMC?
We are looking at conditions like the anatomical loss or loss of use of a limb, total blindness, or a combination of severe conditions that result in the veteran requiring regular aid and attendance from another human being just to perform basic activities of daily living.
That makes sense.
Yeah. And SMC operates on a tiered system, and the upper tiers provide thousands of dollars a month above that $3,900 baseline we established earlier.
Wow. And the notes mention one other program for retirees.
Yes, CRDP, which stands for Concurrent Retirement and Disability Pay.
Okay.
Historically, there was a rule that you couldn't double dip federal funds. If you got $1 in VA disability, they subtracted $1 from your military retirement pension.
Right, the offset.
But under CRDP, if you are a military retiree with a combined VA disability rating of 50% or higher, which obviously includes everyone we're talking about today at 100% P&T, that offset is completely eliminated.
Oh, that's huge.
It is. You receive your full military retirement pension and your full VA disability compensation concurrently with zero offsets.
So we'll leave you with this final thought to mull over. You've reached total status, you survived the evaluations, you got the rating, and you probably got that confusing 1987 pamphlet. But based on the unique, specific mechanics of your own conditions, is there an entirely new tier of compensation like SMC that you might still be leaving on the table? The bureaucratic maze doesn't necessarily end at 100%.
It really doesn't.
Take charge, dig into the details of these programs, and make absolutely sure you are claiming every single prize you have rightfully earned. Thanks for joining us, and we'll catch you on the next deep dive.
If you found this video helpful, please consider donating to helpallvets.org. Thank you.